Live. Hi. Okay. There we go. Hi, it's Alan Mendelson. You all know me from my 15 years at KCAL TV here in Los Angeles and Southern California, and then my years with the Best Buys TV show. You've seen me on CNBC and CNN and CBS News. And now I'm with Gary Khachatrian, right?
Khachatrian, yes.
Khachatrian. You know, listen, the pronunciation isn't right, but what's right is how they do in real estate and what they do for buyers and sellers and for other professionals in the real estate business. And we're at Lyonsgate Realty in Burbank. Now, I know Gary and his partners for years. So I know they're straight shooters. And they give you the honest to God goodness about what's going on in the real estate market, the real facts. This is not a great time in real estate. We know the economy is having a lot of trouble right now. There are problems with mortgages. There are problems with real estate sales, but it doesn't mean doom and gloom. And that's what we're here to talk about with Gary. So let's find out about the current conditions. How are you seeing it? Let's start with the buyers first. Good time to buy a house, not a good time to buy. What do you say?
Thank you very much for introduction, Alan. So my personal opinion is basically the analysts, they kind of divide into half. Some think very pessimistic that the market is going to crash and this is not a good time to buy. I mean, all negative stuff. And there's the other half, which I support. They actually were thinking positive about what's going on. I do not personally believe that the market is going to crash hard. There will definitely be an adjustment, that's for sure. Real estate is very cyclical. What goes up has to come down. The question would be, how hard would it come down? I don't believe it would come down hard, especially in California, because real estate basically is based on supply and demand.
All and the there outside is no extra supply.
Yeah.
It's not there.
And demand is pretty high.
Right.
There's a lot of people in this state. You know, this is one of the biggest states in the United States.
It's number one.
It's number one. Yeah. So therefore, the demand is pretty high. So if the demand is high, even though the outside factors like rising interest rates, inflation, and overall economic conditions in the United States might affect it a little bit, they do not affect real estate directly. So what affects real estate directly is supply and demand. So if there is a shortage of homes and there's a huge demand of buyers, there you go. Chances of market crashing is probably very low.
Okay, so we're not going to have a crash. I agree with you.
My personal opinion.
I'm going to agree with you because we don't have the negative conditions we had in 2008.
Correct.
I mean, this economy is still strong despite problems in certain sectors, despite the problems we had with COVID and the pandemic and all those shutdowns, and despite the problems with inflation. Inflation really isn't that bad. My first mortgage, when I bought my first house, was at 18%.
Yeah.
Top rates now are what, about 5 to 6%?
Average rate is about 5.25% as of couple of days ago.
Yeah, we're not at 18% anymore,
no.
folks. We're not going to have those dire situations that we had back in 1979 and 1980, and then again when we had the crash in 2008. Those conditions do not exist now.
And if you guys remember, in 2008, the main reason for the crash was the banks themselves. They participated in predatory lending. They were giving out loans to people that did not deserve it, with zero down payment, with negative equity in it. But if you look at the deals that happened in the past few years, especially in California, people have huge amounts of equity in their homes, hundreds and hundreds and thousands of dollars. So you tell me,
I saw,
if somebody's going to walk away from that equity and give it to the bank or something. So chances are that's not going to happen.
Now, the figure I saw was $275,000 of equity in houses today.
On average.
Yeah, $275,000. So if people fall behind, they can go out and they can get a loan against that $275,000 to ride out the storm.
Exactly.
All right. $275,000 will ride out a very long storm.
Yep.
I don't think we're going to have a very long storm. We're going to have a storm of maybe 6 to 9 months, even in a year. Believe me, you can go very far on $275,000.
No, absolutely. And what I think happened in the past few years, absolutely, the prices went beyond control. People were, paying 2, 3, 400,000 over asking prices. So I think, and that's not normal market. Okay, so right now people think it was going to crash. No, my opinion is it's going to go back to normal market. Prices are going to be homes will be priced according to current market conditions, and buyers actually going to buy for how much the property is worth, not 200,000-300,000 over fair market value of it. So I think we're going
Wait,
to
say
have,
that again,
yeah,
because that's really important, because you really hit the nail on the head there.
Yeah.
All right, we're going to get a realistic market, not a crashing market.
exactly the market that should have existed to begin with.
Okay.
So what I call a healthy real estate market, where pretty much there's, of course, with rising interest rate, there'll be a certain amount of buyers that will be left out of the market just because they can't qualify anymore for lower payments. But that's just a small percentage of buyers.
Because 5% is not that huge a mortgage.
Right.
Now, to somebody who could only qualify at 2.5%, 5% is a shock.
Exactly.
But the reality is there are a lot of people who could still qualify at 5%. Okay,
Right.
let's talk about prices. How much are they going to come down, if they're going to come down at all?
I believe there will be price adjustment. How much it's hard to say. It will depend on the area. Like in California, it also has areas where there was a huge appreciation in value, and again, I don't believe that was a realistic value. So even the way I look at it, even let's say the average price in our area is about 900,000. So even if it goes down to 800,000, which I think is pretty extreme, okay. So the way I believe it will be very for a shorter time.
You're talking about 10%.
About 10%.
10%, in all honesty, can be made up in 2 years later.
Maybe even faster than
It
that.
may be even faster.
So it will be definitely an adjustment to a healthy, realistic market, but then the demand will kick in again, and therefore, whatever the price will come down, it will come back again because the supply cannot keep up with the demand.
I live in Las Vegas, and I've seen price adjustments now, but the price adjustments have only been on a typical home selling for $250,000. They've only been $4,000 or $5,000. Prices are not crashing, and the Las Vegas market is a lot more susceptible to problems than the California market is, because incomes are much lower in Las Vegas than they are in California. So if in Nevada prices are only going down $4,000 or $5,000, which is maybe 3 or 4% or 5%, you got to imagine that the price correction can't be that much in California.
Yeah, that's my personal opinion. That even if it goes down by not a lot, and it should bounce right back pretty quick.
All right. So if you're a buyer, how do you use this information? Do you say to yourself, you're going to wait till prices come down that 4 or 5%, or do you still go ahead and buy now? Don't worry about the price correction because you'll make up that price difference in 2 years anyway.
Here's my response to all the time when I've been asked question, is this a good time to buy? And my response always was, there's always a good time to buy. It depends what your purpose is. It depends what your financial situation is, of course. If you can afford the payment of the current interest rates, which is, I think, a normal rate, 5.5%, that's normal rate. I remember back in the days when it was 8.5%, 9%, and people were refinancing to that rate.
Right.
So 5% is a fair rate. Yeah, we got spoiled with 2%, 2.5%, but that's probably not going to happen again.
What's funny is that during the pandemic, when mortgage rates were down about 2.5% to 2.5%, people were literally buying houses, with the government benefit checks they were getting, whether it was unemployment checks or stimulus checks. They were using that money. those people who are actually speculators
Hmm.
are the ones who are going to get hurt in this market. But the real homeowners, the people who want a home to live in, are not the ones who are going to get hurt.
Exactly. Those are real buyers. They will put in 20, 30, 40% down, even some of them buying cash. So that's why I believe there will be a percentage of defaulted loans, of course. It's just it's a nature of the beast. That's how it is. But I don't believe it's going to be a majority thing going on.
You know, it's funny, but years ago, I had a lot of clients in my advertising business who were in the business of helping people refinance their mortgages or get deals with banks rather than lose their houses. That business actually went away because people were able to sell their houses. I still think people will be able to sell their houses and they're not going to see foreclosures go up. I don't
Exactly.
think they're going to be defaulting.
It
They
will
may,
not make financial sense for them to walk away from 2, 3, 400,000 of equity.
right.
They will just cash out.
They may take a little hit, but
Yeah.
how much of a hit are they going to take? Like you talked about,
Yeah.
maybe 10%. Personally, I think it might be less. It might be only 5%.
Mhm.
5 or 10% is not going to kill you over a long term.
Right.
It's not.
And so that you guys know, in the normal real estate market, for the buyer to negotiate 5 to 10% of the asking price is just a norm. So yeah, we've been spoiled in the past few years. Actually, people paying over asking, but negotiating 5 to 10% off the asking price is just a normal real estate market.
So we may return to that where sellers have to be realistic that when they price their house at $900,000, don't expect 1.2 million to walk in the door.
Exactly. They should not only expect a price reduction. There's other, in my opinion, better ways of handling. Like if we represent the sellers, we will not suggest price reductions. We will recommend some kind of incentives for buyers. There's a bunch of different programs where you can actually, the seller can pay to buy down buyer's mortgage. So that would help them qualify. It's instead of reducing it by 30, 40,000, they can actually apply that incentive to the buyer, make them qualify and afford the property, and it will actually be very good, a healthy decision for real estate market.
So there are incentives now for buyers?
We see more and more incentives now. Yeah, come up. Some pay buyers closing costs, some pay points of the mortgage for the buyers. By the way, we at Lyonsgate Realty, if we represent you as a buyer or the seller in the transaction, we will credit 10% of our commissions back to you in the form of closing costs that we pay for. So therefore, it will be a big help for you if you're buying or selling the property. So that's our commitment to the community.
Okay, so for people who have just joined us late, we're talking with Gary from Lyonsgate Realty in Burbank. I'm Alan Mendelson. Let me give you the phone number for Lyonsgate Realty. It's 818-912-0090. I'm going to repeat it. It's also in the description for the video. 818-912-0090 and lionsgaterealty.com. LYONSGATE is how they spell Lionsgate. Not like the animal, it's like the royalty.
Yes,
It's not the lion animal, it's the lion royalty. But Lionsgate Realty in Burbank, they serve all of Southern California.
Right
There it is. Okay, good. And we got the description, and all the information is in the description. Okay, so let's talk about. We mentioned the buyers. What are you doing with sellers now? What are you telling them?
With sellers, we have actually a few incentives and marketing programs that we implement. With sellers, you have to take a different approach because you're pretty much on the other side of the road. We offer a special cash purchase program where we have investors lined up to buy the properties. Here's the kicker: not at the discount, at the fair market value. Where we do have a few actually investors, they're willing to purchase the property at the fair market value. There's some fees involved with that. If the seller wants to sell the property fairly quick, we can definitely use that cash purchase program. If not, we have other great programs and marketing that we do to get our sellers top dollar. And like I mentioned before, we're willing to help the seller out also with our 10% contribution from our commission towards their closing costs. Our commissions are very fair, probably the most reasonable on the market. Our marketing programs are very unique. We don't just use what everybody else uses. We actually design our own marketing programs. And I personally am a member of private coaching that we get very unique marketing ideas.
One thing that Lyonsgate Realty does right is that they actually invest in your sale. So if you're selling a house, they're actually going to market the house. They just don't put up a sign on the front yard. Let me tell you something. Realtors who just put up signs on the front yard are not your friends. They're not doing you a favor. All they're doing is putting up a sign in your front yard that only passersby are going to see. You want your house sold in this market, you've got to advertise it all over because people are moving all over. People commute, people travel. Your buyer from your house, you may be selling a house in Burbank. The buyer for your house may be living in Whittier. They're not going to drive by your house to see your sign. They're going to want to respond to advertising. So that's one thing that Lyonsgate does. They invest in the sale, and that helps you sell your house faster and for a better price too.
Absolutely. I 100% agree with you, Alan, especially in the past few years of the crazy booming real estate market. Realtors did not have to go extra mile in marketing and advertising and promoting the property and working really hard. All they had to do, they were even selling the properties before it was hitting the MLS. So therefore, there was a lot of realtors that were selling properties, and pretty much they got all that for granted.
They got lazy.
It's only a small bunch of brokers, real experienced, active brokers that know how to market the property in any real estate market. If it's down or up, if you have the right marketing setup, marketing ideas and programs, then it doesn't matter if it's an up market or down market. You still give your best service to the sellers.
For the sellers, this is still the prime real estate season.
It is still a great time to sell. Yes.
I mean, this is summertime. This is when people move.
Yeah.
They're not moving in December. They're not moving in November. When people want to move, they want to move during the summer. So this is really a great time to sell before school starts again, right? Also, before people go back to their jobs, the era of working from home is ending. So people are going to have to go back to their office. They may find the office has changed. The office has changed locations. So you're going to want to be looking to find out where your new office is going to be, or if you change jobs. In this economy, a lot of people are changing jobs. There have been a lot of mergers and acquisitions. You've got to be aware of that.
Mm-hmm. Speaking about jobs, I would like to announce that Lyonsgate Realty is actively constantly looking for great agents. We don't hire everyone. We definitely go through match your personality and your abilities must match the whole philosophy of our company, which is a family-oriented. We are a non-corporate company. A lot of attention and help is geared towards helping the agents succeed. My philosophy, I help the agents be successful, and in return, the agents will do a good job with the customers. If the agent is happy, the customer is going to be happy.
Lyonsgate Realty is hiring, and what's significant about that is that I know a lot of real estate offices have shut down. A lot of them have shut down because of the economy and because these were realtors and their offices that were geared for that heavy flow of traffic, and they're not getting that heavy flow of traffic anymore. So for realtors who are realistic and really want to work in this business and work for an organization that knows what they're doing, it's great that you've got jobs open.
Absolutely. Besides that, we, like I mentioned before, we go that extra mile to help agents, whether you're a new agent just starting new in the real estate business, or a seasoned agent that just try to maximize your profits and your marketing efforts and make sure you have better results. And the bottom line is we're all in this business to make money, right? So if you really want to make more money and be part of our family, we have great setup. We have professional office here in Burbank, um, excellent commission splits up to 90%. We have buyer leads, seller leads. Like I mentioned too, we have very unique marketing programs that we implement and teach our agents and help them actually get good goals with that. There's mentorship programs available for those who need it. There's no absolute mandatory meeting requirements. We also do not believe in nickel and diming the agent, so there's no agent transaction fees, no desk fees, no corporate fees, franchise fees, none of that stuff. With Lyonsgate Realty, just straight commission split, and you get the best support from the broker. And actually, two of us, me and Pascal, we run the company very efficiently, and our retention rate is very high. So if you look at possibly, if you're a current realtor with another agency, just do yourself a favor, give us a call, and just to see what we have to offer. At the end of the day, if you don't like it, I mean, you continue what you're doing. But I strongly believe that you will see the huge difference what we have to bring to the table. So give us a call, and
listen, a free call is always a free call. Make the call. Let me go back to sellers for a minute.
Sure.
Are you telling them to do what over the next 30 days? And I'll tell you why I mentioned that. This morning, the news was that maybe the Federal Reserve will not be raising interest rates that much higher because the economy has slowed already by a significant amount.
Mm-hmm.
And while everybody was worried and scared that the Fed was going to keep raising rates by big jumps of 1 percentage point, 3/4 of a percentage point, but repeatedly, those worries seem to be on hold, evaporating right now, because the feeling is that maybe the economy doesn't need that much of a rate increase to slow things down. Oil prices really have come down. Commodity prices really have come down. Interest rates have been high enough to keep people out of the speculative bubble that we had before.
Right.
Maybe enough damage was already done to the economy. A cooling has been done to the economy. A lid has already been put on the economy by the Fed, and maybe the Fed just doesn't have to raise rates that much more.
It's a possibility. I mean, it's we're still not sure which direction it will go, but yeah, definitely. There's I'm the type of person that always try to look good positive signs in any activity, and we'll see a lot of good signs. So it is definitely absolute good time to sell and to buy, because I'm sure when you sell, you got to buy somewhere else. So I think we heading towards a very healthy real estate market.
Let me ask you, the people who are selling now, are they moving up or are they moving down?
All depends. It all depends what their situation is. Some of them are retiring, so they probably moving to a different location. Some of them are even moving out of state for better prices. Like Alan mentioned, we have a brokerage in Miami also. And there, of course, the prices are like half of what California prices are. So we see a lot of people that selling their cashing out pretty much on equity and the great prices here in California. And for half of that price, they're buying in Florida, on the beach or near the beach, and completely different lifestyle to retire. So we do have office in Miami as well. We have about 15 agents over there to help anybody who would like to purchase property there.
You want to give the phone number for the Miami office?
You can call me at the same number, 818-912-0090. I'm the broker for both locations, so I will definitely get you assigned to a very experienced and good agent. And pretty much all of our agents are good because that's just the mentality and the input that we put into the company. We're just like one big family.
Yeah. And I loved living in Florida too. And the ground does not move in Florida. No earthquakes in Florida,
Right.
Which is what I loved about living in Florida. Okay. So what we're, just to sum this up, because we only got a couple of minutes left, to sum this up, we're not looking for a crash. We're looking for really what may only be a modest correction. And all of this talk about a crash has been really on the fringe, but the fringe is what gets the publicity and the headlines.
Exactly.
But a realistic approach is we're looking for a modest correction. But if you have the $900,000 house, don't expect a $1.2 million offer to come through the door.
Right. The 900 will come probably.
The $900,000 offer will come.
Yeah.
And when you have an open house, don't expect a parade of 100 people to come through your house on a Sunday afternoon.
Yeah, they won't be fighting in your driveway. That's for sure. But
you'll still sell your house.
Yeah, and pretty in a fairly short amount of time as well. So that's again what I call a healthy market. Demand is still there. Buyers still need to buy properties, whether it's 5%, 6%, or 7% interest rate. They can refinance it later. And I personally believe the rates will come down a little bit after all this situation that the government will have under control, the inflation and overall situation will be under control, and the rates will come down. That's my.
In the meantime, 5% is not mob interest rates. You want to know about mob interest rates? Like I said, my very first house that I bought back in 1979, or maybe it was 1980.
19%.
The bank, well, the bank was asking 25%, but the builder bought it down to 17%.
Yeah.
The bank literally wanted 25% on a 30-year fixed rate mortgage. The builder bought it down to 17%. Back in the early 80s, rates dropped to 12 and 13%, and everybody thought that was wonderful. Then we had rates as low as 2% just 6 months ago. All right, so now we're at 5%. Compare 2% to 5%, it may sound like a lot until you think about rates used to be 12%, 13%, 17%, or even 25%.
Right. You know? And of course, the difference between 3% and 5.5% might throw few buyers out of market. But if you are that close to qualifying, if the extra $300-400 a month is gonna make it or break it for your budget, then you shouldn't be looking to buy a house to begin with. You know, you should have more of a healthy financial situation when you decide to purchase a home.
You need a cushion.
Yes.
I mean, you can't buy your house with your last dime.
Mm-hmm.
Because that's how you get in trouble.
Most of the lenders actually will require a cushion after your down payment, after your closing costs. This is what we call reserves, and you must have at least 6 months of your monthly payments in reserve in your bank after all expenses. If you don't have that, the bank most likely will deny your loan. Okay,
Gary, we have your contact information in the description on the video. The phone number again, 818-912-0090, Lyonsgate Realty, based here in Burbank, all over Southern California, also an office in Miami. It's great to talk to you.
Okay, great. Thank you so much, Alan. And good luck, everybody.
All right, thank you very much. Appreciate it.